So it is important for you guys to understand the relationship between structure and liquidity. The conventional method of technical analysis dwells so much on structure. Some dwell so much on liquidity, but you rarely see any that brilliantly combine structure and liquidity to make informed decisions of the market. You get. So the idea is that you cannot trade wave analysis alone. You cannot trade wave analysis alone. All right. If you trade wave analysis alone without consideration to your liquidity, you always miss the point. You always miss the point. There are many times I will tell you that this market is still, this chart is still supposed to go up. Why do I say it's still supposed to go up? Because I have the understanding that liquidity is necessary to be cleared before you can see movement. And you can see that I speak more of liquidity and speak less of inducement. Why? Because the essence of inducement is to what? Is to what? What is the essence of inducement?
It's to grab liquidity, sir.
To grab liquidity. So if I know that the essence of inducement is to grab liquidity, you know, so if I'm speaking of liquidity and I'm not talking of inducement, don't blame me. It's because the ultimate goal of an inducement structure is to grab liquidity. Now, look at this structure. I'm going to use this gold as an example. All right? Look at this structure. Right here, we said, let me take this one away. Okay. Right. So right here, what did we say? What did we say of gold structure? Let's go to 4 hours time frame and clear all. What we said was very simple. Though, if you look at daily time frame, it was what? Or it is what? It is in a position to what? To buy. Gold is where? A position to buy, not a position to sell. Because I told you that when you have on any time frame, once you have this break of structure like this, anything below it, you cannot be looking for sell again. Sell is between this level and this level. Why is it that you can no longer look for sell here? Can anybody tell me? Why is it that you can no longer look for sell here?
Yes, the reason is because the market has broken structure and needed to either pull back or
Yes.
either to pull back or
Yes.
to change direction.
Yes, we know that you need to pull back. But why is it that after it has broken structure like that, you now need to pull back? Why? Why does it need to either pull back or reverse? Why? Let me
Because
hear.
I think it is oversold.
You said what?
It can also it can also mean that liquidity has been taken too.
Thank you. Thank you. It's as simple as that because this is a single leg liquidity. You know, they always told you that liquidity means double bottom, right? No, it cannot be. It is, but it can also be what? A single leg. This is a single leg. When a major structure is taken, liquidity comes to the market. So the liquidity that comes to the market may either be the one that is responsible for reversal or the one that is responsible for pullback or correction. So that is why immediately you break this structure like this, you are not eligible to look for sell opportunity on a lower time frame. If you do that, you are doing a disservice to yourself. So this liquidity here is the one that is responsible for this pullback before the next sell. It's pulling it back to what? To your sell area before you now sell. Look at this. Boom, boom, boom. We have broken structure. Right here, we are not supposed to be looking for sell. Why? But but because on the weekly time frame, we have broken. But now, if you go to 4 hours time frame, all right, if you go to 4 hours time frame, you are going to notice something. You are going to notice something. We want to catch a liquidity to the upside, but this pair has not grabbed that liquidity to the upside. Can you see? Are you seeing what I'm saying? You see what I'm saying?
Yes, sir.
Market come down, pull back, break structure, pull back, same level, pull back, same level. Where is the liquidity it needs to take here before it goes to the upside? It has not cleared it. That is the bone of contention. For the mere reason that it has not cleared that liquidity, we now say, okay, if that is the case, this might be liquidity sweep here, upside. This is impulse, impulse, running flat in the middle. But at the time, we say, no, this cannot be, because if you have impulse here, you must have impulse here. Why must you have 3 waves here? Okay, so we now change the structure that if you have 3 waves here, this is an impulse, this is an impulse. This is a fantastic expanding flat for us. So if you have 3 waves here, then you must have 3 waves right here. Okay, so and once that 3 waves right here breaks this low, what is the implication based on wave analysis? You know, you are having a push up here, all right, and you are having A, B, and C here. And if this C breaks the level of A here, what is the implication? Can anybody tell me what is the implication?
Liquidity has been taken. Liquidity has been taken.
Okay, and if liquidity has been taken, what is the implication on the overall structure here? What's the implication? What's the implication on the overall structure?
That means the market will be looking for buy.
And the market will surely be looking for buy. It has taken liquidity for buy. It must look for buy. But what is the implication for the overall structure here? What's the implication? This is what is missing. What is the implication on the overall structure of the market? What is the implication? This is where NTFX trading wave analysis methodology is different from Elliott wave theory. If you understand Elliott wave theory, you can't catch up with my methodology here. You can't. Look at it. You see 3 waves up here. You see A, B, and C here. Once this B, I have taught you several times, once this C has taken the level of A here, what does it mean? It then means that this is not a move for the upside. It's just a part of the corrective structure. It then means you have A, B, C, and you are still coming down. You are still coming down. Has somebody understood what I've just done now?
Yes, yes, sir.
If you have your A like this, and you have your B that takes the level of A here, it means that this is not an impulse, because the rules says that an impulse must not be taken by a corrective structure. So if you have this as an impulse and you are having this corrective structure breaking the level here, what does it mean? It means that this is not an impulse like 1, 2, 3, 4, 5 for you to proceed to the upside. It is an impulse for a corrective structure A. All right, A, B, and C. This become what? B. It means that you must have C here to break this top. From here, you are still coming down. You are still coming down. That's how it works. Okay, so but you now have to learn how to take the structure one after the other, At every swing point, if you are able to determine your structure, then you catch your trade. Look at 1 hour time frame. Look at what I just did here. You know, I gave you this setup that we're expecting a downside on gold. And what is the essence of that downside? We wanted to do what? We wanted to catch liquidity below before we move up. Now look at something. You have A here, you have B here, you have C here. Do you notice that if you have A here, B here, and you want to have C here, do you notice that B has taken the level of A? Do you notice it? Do you
Yes.
notice it?
Yes, sir.
That is what I'm teaching you here. Once B has taken the level of A, it then means that here is you are eligible to look for buy setup to the upside. This is what I show you guys every day. But you know, some of you fail to buy Elliott Wave course. You thought I would give you free of charge. You failed to buy it. It's your sure way to understand market forecasting. Many people think, oh, this guy is looking for money. That's why he asks us to buy it. Forget about I'm looking for money. It's for your own good because what I do that make trading look effortless for me. I have to show you, and where I can show you is either in the book or in the chart. And if you say you don't want it in the chart, it's none of my business. So right here, you can see the structure is complete against the overlap. You can see liquidity is taken from here, begin to look for trend to the upside. Begin to look for trend entry to the upside. Is that okay now? So that is how you take this seed trade. You know, if you watch my YouTube video on NTFX signature setup, you see that I take two types of setup. This one that you have B has taken the level of A, I will trade this C. All right, which I did the other time. And the second one is if this one has completed, then I will trade this one, continuation. These are the two setups that I trade. But now, what happened? We are looking for buy. But why did I tell you to now look for, we are looking for sell? Why did I tell you to now look for buy? Here. Look at it here. Look at it here. No liquidity is taken. You will notice that when market is supposed to take liquidity and it did not take it, for the market to go, for it to move with speed will be difficult until it shall grab that liquidity before it will be able to go. So now, what do we see? We fail to grab the liquidity here, equal high. We now have A, B, and C. I know many supposed to catch this buy, but I don't know why many don't understand the structure. And you see, if you don't grab liquidity on any sector, don't look for trade. Many of you should be surprised. Why is my entry falling at the extreme? That is when structure is complete. Look at it. 8 o'clock. 8 o'clock. Look at it. Look at it. Look at it. Sometimes, if your stop loss is too far, this is the beginning of impulse. Your stop loss is too far. You can go and look for liquidity on the lower time frame. If it's just to catch a later entry, all right? If it's just to catch a later entry, and it must be at a time that what? That volume is high. What time is this? 7 a.m. in the morning. That is what do you call it? Headquarter of Germany, or what do we call them? That's pre-London session, early London, early European Open. That's German. German market is dominant before the London. All right. So if the structure is complete here, what do you notice on 1 hour time frame? Liquidity has been grabbed. If liquidity is not taken, what are you doing with trading? It's not necessary. Look at it. Single leg liquidity. Taking. Forming what? Irregular flap. If you like, you call it fake demand. All right? This is a fake demand that's been taken out. Okay? And because I cannot enter a buy here and put my stop loss here, I can decide to go maybe 5 minutes or 15 minutes or anything. But let me just use the example of 3 minutes for you. What do I want to see? What do I say I want to see? Well, who can tell me the sequence for entry if you don't want to fail? What is the sequence for entry, guys? What is the sequence for entry?
Liquidity grab and then
Liquidity
impulse.
grab. What's the next one?
There must be an impulse.
Impulse.
Liquidity graph, impulse,
In this
Then
way.
A-wave correction.
Correction. Yes. You must see liquidity graph, impulse, and correction. And when should you notice this sequence? When structure is complete and the time is what? High volume session. Look at it, European session, high volume session. What do you see here? Liquidity graph, very strong. When you see a liquidity graph, you see the candle very strong, grab it and move out. Okay, impulse. After impulse, what do you want to see? Corrective structure. Okay, what type of corrective structure is this? Who can get this? Who can get this? What type of corrective structure is this? That is why.
Zigzag corrective structure.
Eh?
Zigzag corrective structure.
You say zigzag, okay. Somebody says zigzag. Who else again? Who else?
Zigzag, really.
You say what?
It's a flat corrective structure.
Somebody says a flat corrective structure. Yes. What type of flat is that? Oh,
This is
let's
regular
move on.
flat.
Eh?
Regular
That's
flat.
Aha. So,
No,
look
a
to the
contracting
curve.
flat.
Contracting flat, correct. Contracting flat.
Okay.
You have impulse, you have A, you have B does not call the level of A, and C does not call the level of A. So you have what? Contracting flat. It's contracting for a move to the upside. This is a contracting flat. This is your entry. Boom. To the upside. Can you see how the entry was caught here? I think I show you this trade. All I can do, I'm finding it difficult to say buy here, sell here. It's not a signal channel, but I will show you the direction and catch my trade and show you. If you want to know more, you go to the course, you go and study. You know, I'm going to send a video soon that will tell you that I've retired from teaching FX. Okay, I'm trying to retire from teaching FX. You go to my course, study what you see here, then come to me, come and see the practical, demonstration of what you study there. All right, look at 1 hour time frame. So as I told you that time, why did I say look for upside again? Because we had not really caught liquidity here. So in as much as the liquidity here has not been caught, we will still continue to try to look for the upside until we take that liquidity. And even if we take that liquidity, we must not break this level. Once we break this level, what happens? Look at our impulse. If our impulse is invalidated by this, and we take it out, oh my goodness, who can tell me the next thing to expect? Who can tell me the next thing to
Looking for
expect?
buy.
What do you say?
Looking for buy.
I'm not hearing you.
I said you need to sell it downward because the impulse now is not part of corrective.
Thank you. Thank you. If this move to the upside break this our impulse, it means that we have crossed our invalidation level to the downside. So what we now have is that this has become a part of corrective structure. This become A, this is A, B, and C, and then this is A, this is B, and then you must have C here to break this low, and then it move to the upside. This is wave analysis. This is not Elliott wave theory now. This is complete wave analysis where you are working hand in hand with liquidity. Liquidity is your friend here. And liquidity means availability of money where market does not change value significantly. It cannot deceive you again. That's what liquidity is all about. That's what it is all about. So you can see this is the sense in wave analysis that is different from Elliott wave theory. And once you master it, you get it, you become a perfect interpreter of charts. A perfect interpreter of charts. Why do you think if I show you this, how it will go that direction? Why do you think it is so? It is because we have infused liquidity into wave analysis, and that gives us a perfect reading of the chart. Is that okay? You see that I was not afraid to tell you gold should go up because I know I'm targeting this liquidity here. It should go up. Right here, I said it should go down. You refuse to clear liquidity and give a three-wave structure. And after I gave this three-wave structure, fantastic, it must go up again. Go and break it. He did not break it. I said, okay, since it was coming down, I'm not going to sell. What I need is come and take the here for me. Once you take this level, I will go up again to target here. And what did he do? He took here. At what time did he take here? Overlap. So when you go to lower time frame to see, so that your stop loss will not be too high, can you see? Look at it. Look at it. Just watch something. What do you need? What is the sequence? You will see the build up. You see the liquidity graph. If you take this as the liquidity graph and you take this as impulse, excuse me, sir, excuse me, ma'am, where is the correction? It does not exist. So this is part of the liquidity graph. This is what? An impulse. This is what? A correction, but not up to. Not a significant correction. So when you have not significant correction like that, do not jump in. Do not worry yourself. You now apply principle of alternation that says when the first pullback is very shallow, allow the next impulse to happen, and then the next pullback must be what? Must be very deep. Look at the deep. Boom. Look at your trade here. Applying principle of alternation. Instead of having your stop loss here, this was my stop loss. That is all. That is all, guys. That is all. The trade is broken even the trade, and it has to be going. Where is my target? I'm targeting liquidity. Remember, wave structure and liquidity. Where is the wave now? Look at it. A, 1, 2, and 3. That is wave B, and this is the wave C. and this wave C. Who does not understand what I've just done now? Now, somebody will tell me, why is your B sharp? Okay, Elliott wave theory does not like B to be sharp. But the new idea in wave analysis requires that if wave A is sharp, wave B is sharp, all we need is that wave C must be sharp. If the three waves are sharp, it is completely fantastic for wave analysis. And look at it here. Look at your wave A here. Look at wave A here. You see wave A here? This is the big A. Let me do it with an arrow. Let me do it with an arrow, guys. Look at it. Look at it. This is wave A right here. All right? This is a big A. Big A. All right? Now, see the small A, B, and C. A, B, and C. This A, B, and C now produce what? The big B. And then, look at it. What is this one? Wave C. This wave C has not taken away the level of wave A. Has it not taken it away? It has taken it away. That is the liquidity that is required in order to form this one. So this move to the upside that you have here, you need it to now form right here. So by the time it forms right here, you are now waiting to see whether it's going to break this level or not. If it does not break this level, then it's still valid to say you have with you have 1, you have 2, and then you can proceed to the downside. But as soon as this level is invalidated, we say bye-bye to what? Bye-bye to sell setup. We have to start looking for what? For buy setup. Can you see how we are combining liquidity and wave analysis now? Look at it here. Look at it here. You are having downside, pullback, downside. Okay, break of structure. Look at impulse here. How do you know whether this impulse is a leading impulse to the upside or a part of the corrective structure? How do you know? Look at it. You are now having A, B, and C. And my C is taking the level of A. So it has invalidated the foundational theory of wave analysis that say corrective structure must not break the level of impulse. And for that reason, this is not wave 1 again, because the level of the beginning of the impulse has been taken. This has become wave what? Wave A. This has become wave C, wave B, and then wave C must what? Must cut this level. So already I had known that as soon as we take this level, I will be looking for sell for gold. But for some people who do not understand market forecasting, as soon as this level is taken and they are seeing big impulse, what are they looking for? Corrective structure here. To what? To buy more. It does not work that way. So we already knew the same thing I taught you, that anyhow, once this one cross this level, we are looking for sell. Okay, and right now it has one what? Expanding flat, A, B, and C. C here has taken the level of A, B here has taken the level of B. This is an expanding flat. So that this move that comes downside must be repeated here. That was the sense. And you can see from here, we started looking for move to the downside. But at every point in time, when you have liquidity taking, this is a liquidity taking. Simple. When you have a swing point like that, do your structure and see how that level is taken. Once that level is taken, you know you are going to have this boom to the upside. See another one. This impulse here, A, B, and C, corrective structure, and this one come down. You know that this one will come to what? To clear this level. This is how you look at your structure and your liquidity. Okay? This is how you look at it. You can't be following me and not knowing how to apply liquidity and structure to make informed decisions. This is the difference between me and you must bridge that gap. You must bridge that gap. I want to retire from public service as far as FX is concerned. But as many that choose to follow me, they must master this game before I leave. Okay? It is not unto death. But, doing a lot more things and then, doing my things on a private note. You want to see me, you want to consult, you meet me, you have that consultation, and you go. But for me to come and be talking in the public, I don't think it will continue forever. So you must get these things now. Do you understand now? So I will still do more, analysis for you on the relationship between liquidity and wave structure. It's on every time frame, every structure. You will see it. Maybe next time I will have to now introduce efficiency. By the time I introduce efficiency, then you are now seeing how you will do your entry. All right. So, any question, guys? Any question? Look at the same pattern. Okay, same pattern. When you see corrective structure, liquidity is grabbed from here, you know this upside is coming. Okay, the upside is coming. Look at it. Look at it. This was a very fantastic structure. A very fantastic structure that was spotted. Okay, 1, 2, 3. Okay, 1, 2, 3. And then 1, 2, 3. Fantastic structure. Okay, some people call it WXY. WXY structure, 3, 3, 3, 3. And then you know that this one that moves upside to the upside, this one that moves to the upside here must come here. And in the process of coming here, what did he do? He make a push up. Did he take this level? No. So you should know that this one does not grab any liquidity for sale. Don't even look for sell setup there because it has not taken liquidity for sale. So this is just plain part of the structure for the what? Buy. Now I have cleared the liquidity now. At this point in time, I can now be looking for what? A sell setup to the downside. Break structure. Regular flat, break structure, regular flat, break structure. Oh my goodness. Expanding flat, break structure. Any question? I want to go. Any question?
Yes, sir. Yes, on gold.
Yes.
The entry of 3 minutes time frame. I think the second to the last buy you had on gold.
Yes.
I would like us to go back to gold.
Okay.
Yes. Regarding the liquidity grab or your entry time frame.
Yes.
After the liquidity, the impulse not supposed to come immediately.
You said the impulse is not supposed to come immediately.
The buy you took before the one you took today.
I'm not hearing you, guy. I'm not hearing you.
I said the buy trade you took before the one of today.
Is it this one? Are you talking of this structure here?
No, sir. That was yesterday.
This is today. Are you talking of yesterday?
Yes, sir.
Okay, this one here.
Exactly. Yeah.
What is the problem
My
with it?
question is, okay, after the liquidity grab, is the
Mhm.
impulse not supposed to immediately?
No, if it comes immediately, fantastic. If it does not come immediately, no problem. You have had your liquidity grab here. So sometimes it accumulates, boom, and now make a boom up, corrective structure before you go. Sometimes it accumulates, but what is important is this liquidity grab here. Boom. So maybe after I grab liquidity, it's not looking for order before it goes. But what is important for us is this sharp move and this sharp move. We have this impulse, grab liquidity. We have this sharp move, that's intention to go up, corrective structure, then we buy. Is that okay now?
Yes, sir.
It's not every time that it make impulse immediately after that liquidity grab. It's not every time. Okay, and remember, let me show you something. What time is this? 6:38. I'm forgetting this. What is the headquarter of Germany? What do you call that German market? Somebody should remind me, I beg. You have London. You have what? Is it Brentford? Brentford Open, something like that. I can't remember. Assignment to everybody. What is the market? Germany market. What do you call it? Frankfurt? Thank you. Frankfurt Open. Okay. So now this is liquidity is grabbed here, see something. So Frankfurt has not even opened. It has to wait till that time. And what do you see here? Frankfurt Open. You have that impulse. Okay. You have that corrective structure. You have the upside. So it's not every time that it makes that immediate impulse after liquidity grab. Sometimes it will delay. But what is important is that does it make it? Yes. That's what we want to see. And once you are able to read your chart well, you are okay. And if you are not even able to catch the entry here, can you see shallow correction? Don't worry. You have a lot of room here on cover. Don't worry. The next impulse will now target a deep correction. That is the principle of alternation. Okay. Three-wave structure, liquidity is taken here, right here. Stop loss is here. Entry. What time is this? What time is this? 2 p.m. That is overlap. It's as simple as that. Another question? Another question? You can't afford to trade without liquidity. If you don't see liquidity on your choosing analysis time frame, maybe 1 hour, maybe 4 hours, maybe if you don't see liquidity there, don't even go to your entry time frame. There is nothing to do there. You are wasting your time. Don't go to your entry time frame. You are wasting your time. And I've showed you how to get the idea of the liquidity. Do the structure. And after you do the structure, then you are looking for the liquidity. And that's why I don't trade, most of the time, I don't trade a running flat. Why? You have A, B, and what? And C. This is a running flat right here. Do you see that this leg here does not clear liquidity? I don't like it. Before I trade it, I must have seen the push to break this low high. Then I will now look for corrective structure before I go. That is why it is dangerous to also trade what? A contracting flat on analysis time frame, not on entry time frame. Look at it. Boom, boom, boom. Can you see this is a contracting flat? Did it take this liquidity? No, it does not take that liquidity. So for you to take it, it must come, make impulse, break this top, then corrective structure before you go. Am I making sense now? Am I making sense? Am I making
Too
sense?
much, sir.
Yeah, these
Yes,
are
sir.
some of the secrets. Why you guys don't encourage me is that most of you did not buy the market forecasting course. So if I'm teaching you the application, I am building something or nothing. So I'm taking it as I'm wasting my time. My course on Elliott wave theory you watched before is a child play. Push it aside. Push it aside because I did not combine it with liquidity. But this is where the real understanding of wave analysis just happen. Okay? This is where market will be changing structure like this. You have understood perfectly what market is trying to do. That's this way you get it. This where you get it. But if you don't have that wave market forecasting course, if I'm talking here, I'm just talking. Okay, look at the way I'm cutting the weight. Look at the way I'm showing you. As if I can tell you this is where market is going with confidence. I need to go there. I will show you. I will show you a message from one of our person here. Look at it. Are you seeing my Telegram? Are you seeing my Telegram?
No, sir. We see
You are seeing Telegram.
yeah.
Look at message. Good morning, good afternoon, good morning, sir. How was your day going, sir? Thank you for the USDJPY and gold call. God will continue to bless the work of your hands. Can you see? What did I do? I just gave forecast. Just a forecast. And he followed the forecast and he got it right. What if this person also know how to do the forecast by himself or herself? Let me not reveal the identity.